And now I have three sections in this webinar. Number one, I want to quickly cover PPP. So this is June 6th. On June 6th, I had this webinar talking about these loan details, the changes that came in on the 5th of June. So you want to make sure that you look at the June 6th webinar to learn these changes. Then on Tuesday, I think is June 9th, I had a case study related to this again. So those are connected webinars. And today, however, I want to just mention one thing about PPP. PPP is coming to an end. It did not extend the application period. It changed a lot of things, but did not change this one. So on June 30th, the last day PPP loan application can be approved by SBA. So what does that mean? That means the loan, the SBA just going to work on the midnight of June 30th, and they say they're done. They approved these loans. These loans are going through. But if they did not approve it on June 30th, even though you submitted on June 1st, and you will not get it. So it is SBA's approval date is June 30th. So I want to make sure that when you submit the application to lender, you want to ask them about that. You want to ask them whether this is going to SBA before June 30th so it can be approved. Otherwise, you're wasting of your time, right? And there is still $130 billion available to small businesses that no one claimed it. No one went to get that money. And it's just sad that we have money left. But obviously, if we don't use this money for PPP, the government can print less cash and we have lesser of inflation, which we hope. And where do you apply? Of course, you're going to go to your bank, right? If you have a bank you do banking with, even if it is personal banking, that's fine. You go to the bank to do that. That's number one. But number two, you can also use online resources, which I want to show you what that online resources is. And one of the one our firm worked on, and we worked with Kabbage, Kabbage, Kabbage.com. You come here to apply for PPP, apply now, right? And so we have done several with Kabbage for our client because they don't really have a bank that willing to take them, and we have gone through them pretty smoothly. So we think that Kabbage is one good resources for you to apply. The other one, it is Blue Wine, and that is another one, and it works similar with Kabbage, but it is a vendor that we just discovered a little later than Kabbage, so we don't have as much as experience with Blue Wine. But these two, I want to point that out to you because I knew that you will want to know where to apply and hurry up to apply, right? And then now let's go back to our slides again. So who might be missing PPP? And we know the big company, they have gone through that the first round. Some of our small businesses got lucky with great help from the bank. They gone through that the first round. The second round comes around, and there's a lot of ambiguities related to sole proprietor. And I'll see, so a lot of sole proprietors didn't apply. Our firm there's an older couple who has done Schedule C business for 30 years, okay? Didn't really make big money, $40,000 a year net profit. They didn't even know they can apply for PPP. So we happened to get to know them, and I told them that apply. So we applied on Thursday, they got it on Friday. So this is what we want folks to know, that you really need to understand what you can apply. If you already applied PPP for one of your business, but you have other businesses, they are separately eligible. It's not like you can only apply for one. You can apply for multiple if you have multiple businesses, but they have to be qualified by each one of the business, right? So I listed a couple, which is the common ones that missed PPP, And if you go back to my my Tuesday, I think it's June 9th, webinar, and I literally was talking about how to apply as a sole proprietor, as an LLC. So don't give it up, and please do apply. And multi-member LLC is also a one that gets forgotten really well, and people are not realizing they could. And startup business. If you started up something in 2020, January, and you are eligible to apply because you don't have a history for 19, you can still apply. And the January, February data would serve you. So I just want you to know. And where to gain the understanding of how to apply. So I pointed out to you that there is a case study, PPP for sole proprietor and LLC member. That is a webinar that is already done, and you can check on YouTube to find it or go to our website. And the June 6th webinar, it is a new change for PPP, and you will get information there as well. Now, so I finished, there's three parts of this webinar. I finished the first part, PPP update. So the second part, this part is EIDL loan, economic injury disaster loan, okay? Normally, this EIDL is not new. It is not created for COVID-19. It was in place, but most likely dealing with earthquake, flood, wildfires, and I know most recently was California wildfires. The clients got affected there. They have EIDL loan. But on March 13, the EIDL loan got expanded to COVID-19. So there's so many people, so many businesses are suddenly qualified for EIDL loan. And the rollout of EIDL loan in the past was very smooth because there was not a countrywide crash into the system. But this time it came really, it went out capacity. So the SBA struggled to get the loan roll out. And remember, back in March, we applied for EIDL loan advance. We're supposed to get it in 3 days, but it didn't really happen. And sometimes in May, the money would suddenly appear on your bank account. Some of our clients didn't even realize they got it. And they kind of changed, they made the $10,000 based on your number of employees. If you are self-employed, they give you $1,000. If you have employees over 10, they give you 10. If you have less than 10, they give you however member. Say you have 4 employees, they give you $4,000. So that is how they structured the advance. However, what about the loan? The loan, when we applied for advance, we also applied for loan. And say you apply for $2 million because that's the maximum you can get. This is the standard loan terms for EIDL loan, not for anything else. And folks, keep in mind, EIDL loan, you don't go to bank. You don't go to bank. You don't talk to your banker. You talk to the government, the SBA loan division, okay? And so that loan terms for EIDL loan is standard. Look at this. It's a loan up to $2 million. And the 30 years term, interest rate is fixed. It doesn't matter how the interest goes outside of the government. And the government says 3.75% for small business, 2.75% for nonprofit. What does that mean? That means nonprofit also eligible to apply for EIDL loan. The first payment is 12 months from the date of the loan document. Signing the loan document, that day, 12 months later, is your first payment. So that means you can use the money for a whole 12 months without worry about paying anything to the loan, to the lender yet. EIDL loan, if it is less than $25,000, if it is more than $25,000 and less than $200,000, the collateral is your business asset. Okay, but if it is less than $25,000, from $0 to $25,000, then there is no security interest needed. They don't need anything. You just get it. Okay, what does that mean? Why do we care about security interest? And in the event where you couldn't pay it back anymore, your business went underground and, not underground, went to ground, zeroed out. You are about to close the business. So what happens to the loan? If your EIDL loan is under $250,000 and your business crashed, and then there's no chasing after you personal property. So you are not personally liable, right? Because it's the business property that secures, guarantees. I know you are looking at my notes, so you just had it here. EIDL loan greater than $25,000, less than $200,000 can be approved without a personal guarantee and take a blanket security interest in business property. And you're here saying, okay, no personal guarantee, I walk away from my personal liability. But what do you mean by take a blanket security interest? Blanket security interest just means everything in your business, okay? And if you bought a diamond ring under your business paid for it, and it is a business asset, then the diamond ring needs to go to EIDL loan, okay? So that's what I mean. As long as it is not under your name, it is under business name, it is business property. And without personal guarantee, that is a huge benefit, okay, for borrowing. So there is no repayment fees. That's also good too. You know why? Because after COVID-19 and your business starts to boom and you really don't want any loan anymore, you can pay back. And some of the banks, if you recall, if you pay back them early, they actually charge you a prepayment penalty, don't they? I have a client paid $25,000 on prepayment penalty. Okay, so that's a real money out of your pocket. But here, SBA says that you can pay me anytime you want, early and possible, and I don't charge you any penalty. And if you need an extension, you can also extend. Did you hear me? And SBA loan can be extended beyond 30 years. Okay, remember when we applied for EIDL loan, you got this advance. Remember, you have 20 employees. When you applied for it, you got this $10,000 deposit mysteriously appeared on your bank account sometimes in May, even though you applied back in March. So that is the advance. So how does this advance work for you? So I have an example here. That advance is not part of the loan, has nothing to do with the loan. You get approved for $25,000, but you also have a $10,000 loan advance. You did not borrow $35,000. You still just borrowed $25,000. But the $10,000 didn't disappear either. It went with your PPP forgivable loan. Okay? And what if you say that, well, what about I didn't even apply for PPP? First of all, I'll say why. Are you crazy? You didn't? And you better come to talk to me. And as soon as this webinar is done, you're calling me. Okay? And my number here is 515-288-3188. We work on Saturdays, so this is our regular time. So I need you to call me to tell me why you don't apply for PPP. I know there's some people cannot, but I don't think that's you. And if you got your advance already, you should qualify for PPP. Anyway, so now you got PPP loan for $50,000. You got the advance for $10,000. So when you apply for loan forgiveness, folks, you need to apply for $60,000. Okay, so this is an example I give you. I just want you to know where you're gonna land your advance dollars. But what if you didn't have a PPP? You just have the $10,000 advance dollars, then you're done. There's nothing to apply. There's nothing to do. The $10,000 is yours. You can spend it. And you don't need to have a loan to have that $10,000. It meant to come to you as additional cash flow for you to get through the difficult time. Okay? So that explains to you the loan advance part, right? How that works. Now, and what about, you say, Well, I did get an EIDL loan, but the maximum they gave me is $150,000, and I have my friends. They told me the same. They just got $150,000. We were asking for $2 million. Are you kidding me? It's not enough. And we knew that it's not enough. And we also knew that SBA started doing this. They give the maximum for $150,000. And remember, if it is under $250,000, there is a security interest is very different, right? And this $150,000 you get, no personal guarantee. The only thing you need to know is that your business asset is now the collateral for the $150,000. If you don't pay back the $150,000 at the end of the 30 years, and I'm sorry, and I will come in. I don't know how would they come in, but in theory, SBA will come in, take your stove, and take your ventilator, and so you can't cook anymore. And so that's just an idea to tell you that what you have in the business belongs to the lender, okay? And you may request, keep in mind, you may request for loan increase for additional disaster-related after getting the portion. So $150,000, you got it for now. It's okay. You can apply for more, but you ask me, do I have a timeline? When do I have to do that? And it is literally no timeline, but this is how it works. Within 2 years, you can apply for additional, then you don't go through the underwriting process like otherwise you would go, because you already applied for $150,000, you got it, so you already have a lot of materials with SBA. So when you apply for additional loan, and it will be something that they utilize, and it's supposed to be easier and quicker, and within 2 years' time. But however, let's say a good example would be one of the gas stations was burned down in California. And so they applied for EIDL loan to rebuild the gas station, of course. So EIDL loan came in. The first application was only $800,000, and then once they, then they start building, and things were not going very good, and the construction itself took more than 2 years. Okay. So by the end of the construction, something came up. They have to do. They don't have money, so they went for special request to EIDL loan, and then they get additional. So it's after 2 years. So 2 years is normal, but there are extraordinary and unforeseeable circumstances beyond the control of the borrower. Then you can get more, and then you can apply for that later. But it's still EIDL loan. It is still the rate. It's still the term. So that's better than a lot of commercial loans out there. All right. And with that, let's just take a closer look at a security interest, because we talked about what is the loan, the collaterals and things like that, and the fancy terms, security interest. And you want to ask me that, okay, give me an example. You mentioned about my stove. You mentioned about my ventilator. And then what else? So basically, in the business world, your security interest in the company is everything you have. That includes your receivable, and it includes your inventory, your equipment, everything you can imagine have a business name on it. It should belong to the security interest. Then you also probably ask me, oh, what does the loan document look like? The loan documents are 19 pages document, and it is actually, because it is SBA loan, so it is not really like what you're thinking, the loan document you see in the bank. So I want to show you what it looked like from the loan document standpoint. This is the cover of the loan document that you will have for EIDL loan. It's very standard. Did you see that? This is disaster assistance. Okay, so this particular letter, it is giving you for EIDL loan. So you have SBA disaster loan number, EIDL loan number. So that loan number is so important because you will use that to spend it. If you want to apply for more, you're not starting a new loan application. You're using this loan number to add on more dollars, okay? And so that's where we say that other than this cover page, there's 19 more pages which lays out a lot of the content I give you today here is related to that, okay? And then we want to talk about EIDL loan is funding for what? Oh, can I use EIDL loan and to rebuild my warehouse? And my warehouse, it has nothing to do with COVID-19. I just want something new. And those are the things EIDL loan was not designed to help you to expand your operation. EIDL loan is for working capital. Okay. Now you will ask me, oh, what is working capital, Ying? Working capital is actually everything related to current asset, everything related to current liability. If you take current asset minus current liability, that's your working capital. So what EIDL loan is saying is that we want you to have the cash flow. I want to come in to make you be able to run your business on a daily basis and to have the cash flow. So let's say if you're in the distribution business and you always purchase inventory, then you sell. But because of COVID-19 and you were, you're in the food distribution business and, you closed for 2 months and all the food you have in the inventory expired, right? And in order to reboost your business, you would have to end up buying inventories right now, because you must be using money to buy inventory in order to sell to get that going. So that is working capital work, because your inventory belongs to current asset, right? If we imagining financial statement, current asset including your receivable, including your inventory, and of course the current liability including all your payables, right? Also including the current portion of long-term liability. With all of that, I know it sounds a little too much accounting, and what I want you to realize is that if you use that money helping your cash flow, then you are already using it in a good cause, okay? EIDL loan funds can be used for a wider range of business working capital to elevate economic injury caused by disaster and occurring in the month of January 31st, 2020 and continuing thereafter. So anything that coming in hinder you to run your business from January 31st, 2020 up to now, up to the near future, and you should use the EIDL loan to do. So example SBA give us is the fixed debt, for example, the rent. And, a very good example would be some people use credit card, borrow the money from the credit card machine. So every month, the credit card business, the credit card merchant services will take $15,000 away from the total credit card money they earned. So those are the fixed debt that is paying by EIDL loan. Payroll, of course, account payable. Well, yeah, you have a bill that you should pay Community CPA, but you haven't really paid yet. Then here comes the EIDL loan. That should be able to enable you to get that caught up, right? And so anything related to you short of cash, as soon as a business owner you go, well, I don't have money, so I cannot pay this bill, that's where the EIDL loan can come into play. So this is where we say the EIDL loan is for working capital. But EIDL loan also not supposed to be used for others, for some things. So let's look at them, okay? So this is the list that was given by SBA. So let's do a deep dive on them and see what they are so you can get the spirit of it. So the loan cannot be used for dividends and the bonuses. So Dividends. What is dividend? Dividend is the money you're running your business, you got a profit, and you got profit so much that you want to pay dividend out to the shareholders. So, well, EIDL loan is for economic injury disaster loan. Obviously, if you are so good at business, why are you even need the loan? You should pay back the loan first, right? So that cannot be used to pay dividends out, to pay bonus. And bonus, if the bonus is part of the structure for your employees' pay, it's different from this bonus right here. This bonus is more bonus for the bosses. Oh yeah, we got so much money we made, let's just write the check to the boss. So those are, no, cannot use EIDL loan. And the disbursement to owners unless the performance of services, which means that you cannot write a check to buy a car for the owner and using EIDL loan. No, but if the boss need a car so that he can do more sales, it is performance of services. That's different, right? So you can disperse the mileage expense to the owner because he was performing services. Otherwise, no. And the repayment of shareholder principal loans. So this one says with exceptions. So it depends, right, what the loan was for. So let's say if the loan was to expand to another office, build a new building and expand, that is out of EIDL loan category, and the owner paid for that. You cannot pay the owner back. So that's what they don't want you to do. And expansion, obviously not. Acquisition, obviously not, unless your purchase is related to disaster. For example, in California wildfire disaster, there's things got destroyed. They have to buy the gas pump in order to rebuild the gas station, right? So those are related to the disaster. But with COVID-19 disaster, I don't think acquisition of fixed asset would be part of the disaster recovery. And the repair and replacement of physical damage not related to COVID-19. You know, I was sitting here thinking what kind of damage, physical damage, would happen to a business asset for COVID-19. I really couldn't I couldn't think of any. So right now I say that I understand because EIDL loan is not just for COVID-19, right? It is for other disasters as well. So this one is just probably not even related to us. And the refinancing long-term debt, you see, this is not working capital, so you cannot do it, okay? That's a long-term debt. Long-term debt is not working capital. Working capital is the current asset minus current liability. So that's not a current liability. And the paying down, you cannot use EIDL loan to pay down federal debt. If you have other things you owe federal government, for example, you didn't pay payroll taxes for the last decade, and now you suddenly goes, oh, yes, I got this money, let's pay that down. No, you cannot. So that is prohibited to use to pay down government debt and the government loan. And also, if you like to relocate, we understand. And for California wildfire, and that cannot be used for relocation. The gas station need to come up at the same place. And if I want to get EIDL loan to pay a relocation, I have to get a consent from SBA. But for COVID-19, why do we want to relocate? COVID-19 is everywhere. It doesn't matter in Iowa or in New York. Well, maybe Iowa is better, right? So COVID-19, no, not for relocation. So now you say, I see. Now I know what I can use, what I cannot. What about compliance? And I will tell you that. As a small business owner, the biggest fear is government compliance review to your business. A lot of people in the very beginning goes, I don't want PPP, I don't want EIDL, because I don't want government to look at my books and records. And that's nonsense, because government gonna look at your book and record even if you don't have these loans, because they can audit you. They can audit you because of your income tax. They can audit you because your employee were underpaid. They can audit you because you did not file, you did not do your payroll properly, so your employee were not covered under unemployment insurance. There's so many things you can be audited. So getting away from government compliance, it probably should not be a goal, because you're just part of the economy, and you will be audited one time or another, right? So EIDL loan though, and the PPP EIDL loan, and also payroll deferrals, those kind of stuff, we are touching on government, because the governments are giving you money on PPP, government giving you EIDL loan. They have the right to compliance review you, and they have a right to ask you to do your accounting right. So now here is what they want. Keep track of how you use these loans. So the best practice we tell clients is that whenever you got government money, your PPP, your EIDL loan, and put them in one separate bank account. So every payment out of that bank account, you should have a record. You should keep that record. And that is required. You say, well, Ying, EIDL loan is for 30 years. You tell me to keep record for 30 years? Absolutely. I am telling you to keep the record for 33 years. Okay? And I'll explain to you why I say that. Because the SBA requires that. This is the words from SBA. Trust me, English is my second language. When I read this sentence, I was so lost. I have to figure out, I have to get someone from have an English literature degree to read this, to understand what it says. Here, SBA says, for the most recent 5 years until 3 years after the date of maturity, including extensions, or the date this loan is paid in full, whichever occurs first. You got it? I am so sure you got it. Okay, let me just give you my Chinglish on this one. Chinglish. We don't speak English. Here, what it says is you must keep, when your loan is done, you need to keep all the record for at least 3 years. Okay, so that's why I say 33 years. Because all the record means everything you spend on this loan, you need to keep the receipt and everything for the duration of the loan. So you have them, you have the 30 years receipts and records, and then you're going to leave them in your garage for 3 more years. So that is the longest time to keep the record, 33 years. But in any given time, you need to keep 5 years the most recent accounting. Okay, 5 years most recent accounting. So if you got to the 33 years, that means the last 2 years of the loan, and plus the 3 years the accounting records don't have the loan anymore, those are the 5 years. Or if you finish your loan in 10 years, then on the 10th year, you should be able to show accounting for 5 years and all your records for the entire 10 years. When I say accounting for 5 years, what I mean is in your business, EIDL is not the only money you have. So it is only a portion of your financial statement is the EIDL loan, but the government wants you to keep the whole book 5 years in order them to inspect. So let's say we finished using this loan on 2024, and you got it on 2020, okay? So you just had 4 years. So government come back and your loan matured, and they're saying that we're going to compliance review you, and do you have your record? We need 5 years, and we need 5 years, all of your accounting record, plus all of your receipts. So you will have that available for them, even though you just run 4 years, but you're going to give them 5 years accounting and 4 year worth of all the receipts and the itemized receipts and invoices, canceled check, contract, whatever you used for the government loan, okay? And then you will say that, well, it's not even worth it if I have a loan, I have to do that much work. Well, it is really not that much work. It is a regular work. That's what accounting, that's what Community CPA is doing. That's what we help our clients doing. You should already have that accounting habit, accounting operation going. You just have to set up a separate bank account and with more with more attention on the details. Make sure that you save all the invoices or you scan them. So it's all doable, and there's nothing in addition to what you should do, but this is what EIDL specifically asking. So just remember the number 5 and the 3. 3 means that the 5 means you're going to give the last 2 years plus 3 years accounting. The 3 means that you're going to keep the record all the way to the end, extra 3 years. So if you spend your loan for 30 years, then you have a 33 years to keep the record. Now, if you have EIDL loan and you cannot do lobbying at any level means that if you have a subcontractor, that subcontractor cannot do that either. So just keep in mind, you cannot use EIDL loan for any political gains, basically. And then no double dipping, which means that if you got EIDL loan and you cannot use that loan to pay something you already got paid for. For example, with California wildfire, and the insurance probably, if they bought the insurance was paying for that, right? So you cannot be having insurance pays you, so you put that in your own pocket, then you use the EIDL loan for rebuilding. That would be totally not right. So we say that EIDL loan is not for you to double dip, okay? And then advice for getting EIDL loan, here's a couple points I have for you. You can get it right now, and you can apply. And I want to show you where to apply. And if you follow my screen here, see, I came to COVID-19 relief.sba.gov, and you should find a screen looking like this. This is where you apply. And I'm literally going to tell you that when you apply for this, and you know, there are questions, and you know, they're asking. Sometimes they make you ineligible for applying for it because of the answer you give. Look at here, expiration date, September 30th, 2020. So they open to September, okay? You can apply. And I also want to tell you that, you know, with PPP, you realize that how much change they give, right? They used to say that you got to spend in 8 weeks, otherwise you lose it or whatever. Now it's 24 weeks. So EIDL loan is also a government-managed finance program. So whenever there is a need, a disaster, say we got a second round of COVID-19 and we're shutting down again, people already needing to pay back EIDL loan, I am so sure the government would come around to give you relief. So this is one thing about, even though we don't like them to comply and review us, but we do want to rely on government assistance to survive in the tough economy, right? And my recommendation, set a separate account, track what you use for, and good accounting is so important. I can't tell you how much more important accounting is. A lot of times people are more care about the tax return. I always tell my client that if your accounting is right, your tax return is a click of a button. It doesn't even use brain. That's why there's people out there putting your tax number on the computer program. They don't even use their brain, and numbers already in, a form is already out, looks so sophisticated and so good looking and clean. It's like a good job done. No. For business owners, know that your accounting statement is actually a million times more important than your tax forms, because that drives your tax forms. Okay, so accounting is important not just for taxes, but for governmental compliance as well. All right, so now we are finishing the second part. We just finished EIDL loan. So we talked about the content on EIDL, and the rest of the 15 minutes looks like we need to tackle payroll tax deferrals. And this is not widely talked about, but it is such a great benefit. And I can't even, I can't afford for you to not to know that as a business owner. So you have to, okay? Now, what is payroll tax deferral? So on June 5th, PPP Flexibility Act made a change to tax deferral program under CARES Act. Okay, this CARES Act is a huge document and not written in Chinglish, but I explain it in Chinglish. So that CARES Act, inside of that CARES Act, there is a thing about you don't have to pay your payroll taxes. You don't have to pay all of the 941. Okay, so this is what we call deferral, just delay it. Payroll tax is what can be delayed. Before, right here, I wrote that the act says that if you got a PPP, you cannot delay. So now that is out of the window. You can, okay? You can delay all of the 2020 payroll taxes, all of the 2020, okay? And so here, I just read it to you because we want to understand how the CARES Act works. The CARES Act permits employers to defer the deposit and the payment of the employer portion of Social Security taxes that otherwise would have to be due on between March 27 all the way to December 31st, 2020. So how many quarters are here? Half of the quarter for first quarter, second quarter, third quarter, fourth quarter. All of the quarter 941 taxes, a portion of it you don't have to pay. Okay, don't have to pay it right now. All right, so the law permits employer, the business owner, instead of deposit half of these deferred payment by the end of by the quarter end. So the first quarter payment due is on April 15, then the second quarter due on July 15. Remember those 941 report, the 941 payment you make on the quarterly? So you don't have to deposit that, and you can deposit half of it on December 2021, the other half on December 2022. Okay, so sometimes I understand some of our small business, they're so wrapped around with everyday in and out, and those kind of things pushed out to the future just make them feel like they're gonna forget. They're thinking that, oh no, too much trouble, I'm not gonna remember this, I'll just pay it now. But that's where the money saving is coming in. You cannot be saving money, also don't want any trouble. So it is not trouble if you book that on your accounting statement properly. If you have that payable sitting there, you will never forget. You will know to pay it. You only forget it because your accounting statement is a mess, because your accountant doesn't even know what they're doing, okay? So really, you want to make sure that you do your accounting statement properly. You have your balance sheet making sense to yourself, right? So that is really important. And I'll tell you that at Community CPA, we probably does more education on financial statement than anything else combined, because people just don't understand, okay? And not because they don't want, not because they are not smart enough to understand it, because they don't care, they don't want it, they don't see the needs, okay? But you should see the needs now. Employer need not to pay a special election to defer, see? So the CARES Act said you don't even need to do anything. You don't have to make a declaration. You don't have to tell me. You just delay it, okay? And it also says that for self-employed individual, and you can defer that too. All right. The guidance explains that self-employed individual may defer payment of 50% of Social Security tax on net earning from self-employment income. Now, I'm going to do an example so that way you know exactly what I'm talking about. Okay. The IRS is working on getting the 940 form renovated in the way that they knew how much you are deferring. But right now, there is no such a place to put that, only on your accounting statement. So now I'm giving you an example for regular employer example. So let's say you run a restaurant. The second quarter 2020, your total gross pay is $50,000. So you pay, let's say you just pay yourself. You know, you're the only employee. The second quarter, you're going to pay yourself $50,000. And the Social Security, from employee portion is $3,100. Social Security from the employer match is $3,100. So the $3,100 from employer match, that can be deferred to 2021 and 2022. So $1,550 you will pay in 2021, $1,550 you will pay in 2022. And I want to bring you to the 940 forms so we can look at that together. See, this is the 940 forms that you are familiar with, right? 940. So I am doing the second quarter. Remember, I was using second quarter as an example, and I have just myself, an employee, and the 50,000, and the 50,000 for Social Security is 6,200 because that's both employer and employee, and also Medicare. That's 1,450. So my total 941 without income tax what I withheld, which I didn't withhold any, to make it simple. It's not right, but I'm just making it simple. So the total payment I really should have paid to this quarter is $7,650, but I am only paying $4,550. Why? Because that $3,100 the employer withheld, the employer match, not withheld, the employer match, that I don't have to pay. I can pay it December of 2021, and I can pay the other half December 2022, right? So I'm going back to this slide, remember? So this is coming back to here, and so I'm paying $1,550 in 2021, the other $1,550 in 2022. Okay, so let's see the self-employed individual. All right, I'm doing the same thing, self-employed, and for the second quarter, my net earning is $50,000. So $50,000 subject to self-employment tax, 15%. And only Social Security portion of self-employment tax is deferred. So 12.4% is Social Security, and I use 12.4 times 50, then only half of it I can defer. So that number is $3,100 again, just like how you run payroll as an individual, okay? So now let me show you what is sole proprietor supposed to do. So this is the Schedule C, right? I know you don't fill it up every quarter, but for this deferral, you want to do this one because you want to say that, oh, for this second quarter, I made $65,000 total sales. My expense is $15,000. My line 31 is $50,000. Your line 31 is the net earning in quarter 2 of 2020. So we use that $50,000 calculated deferrals. So now this kind of brings you back to how you exactly should do these kind of deferrals. And know that this money, no interest, no penalty, you're simply deferring to the future. Why are you not doing that? Where are you going to borrow $3,100 to use without interest and a penalty? The answer is nowhere, but here. But here, if you understand CARES Act inside out,